afternoon, everybody. I am going over the stock Facebook. We are going to find out the fair value of Facebook stock according to the book The Intelligent Investor, written by Benjamin Graham, who was Warren Buffett mentor. We're gonna find the fair value of Facebook as well as the price that Warren Buffett will be a buyer long term. We're gonna find two things: the fair value, what Facebook should be traded as of today, as well as the price that if I'm Warren Buffett, I will be long-term holder if I'm considering buying Facebook stock. And we're starting right. So I'm in Yahoo Finance, Facebook, currently around $295. And the first item on the list that we need to put in the fair value formula is the EPS TTM, meaning earning per share. That's EPS. TTM is trailing 12 months, so basically this particular number, which comes to 878. So we're gonna take 878, we're gonna put it in the Excel, and back in the Excel, earning per share, I'm putting 8.78. Okay, next thing we have is a constant PE growth 8.5. That doesn't move. That's basically meaning that Benjamin Graham says this stock will not grow in the next 7 to 10 years. So we don't have any number. Worst case scenario, we're putting 8.5. That's a constant. I'm not changing that. That's according to the formula. Let's move on to growth. I'm gonna find out the growth as well in Yahoo Finance, how much the growth will be according to the analysts in the next 5 years. So let's go back to Yahoo Finance on all the tabs, and we're gonna find analysis. This tab, analysis, gonna click, and then we're gonna scroll all the way down to find the next 5 years. That's what I care about. So one row before the end, we're looking at growth estimate. We're looking at the next 5 years growth per annual, which comes to 16.6. I'm gonna take this number, 16.6 annual growth, and I'm gonna put it in the Excel. So back in the Excel, this is the growth. I'm gonna put in this here 16.6. Okay, and next step we got growth 16.6 times 2. Basically, if you guys don't saw my other videos, I will link them at the end of this video. But Benjamin Graham basically says I'm super aggressive on the stock market as a whole. Keep in mind, this book was written like 70 years ago, in the 50s or 60s, something like that. Anywhere I think original was 1949. Doesn't matter. So he says anything that you see as growth, just multiply it by 2. That's why if we get a crazy violation, we're gonna use another conservative formula. But for now, before I know any exact number, I'm gonna stick to the original formula. So I'm gonna leave number 2 as a corporate bond, another constant that doesn't change, 4.4. This was the rate again 50 to 70 years ago. 4.4. We just divide everything that we get in the formula by 4.4. And the next thing that we need to actually find the fair value of Facebook is the corporate bond of Facebook. So we got just gonna Google Facebook corporate bond, and we're gonna get the number. Whatever the higher number, that's what I'm gonna put in the formula, because the higher the number, the more conservative we are, and I want to stay conservative to keep a margin of safety. So let's go back. So I googled Facebook corporate bond, and I did another many variations of that, and it turns out that for some reason Facebook does not have a corporate bond. I don't know why. I'm not gonna go into detail. I don't hold Facebook, but if you are, maybe something to think about. I don't understand why not. All the other companies that I've searched do have corporate bond, and in order to solve this problem, I'm just gonna put 4.4 in the formula just to make it as simple as possible. I can't really go 5-6%. It's not 6% like Activision Blizzard, and it's not, I don't know, 2% as well like super safe maybe Nike or Walmart, something like that. It's anywhere in the middle, around 4, so I will put 4.4 just to stay on the safe side. But you can look for yourself for all those results. There is not even one corporate bond. Nobody knows. There's a lot of speculation. Maybe they will go private or something like that. Maybe they will add I don't know, dividend, whatever the case is. Yeah, so yeah, they're gonna put 4.4 in the, so I'm back in the Excel, and in Facebook corporate bond right here I'm gonna click 4.4, and basically once I hit enter, we're gonna find Facebook fair value, and we're not done just yet. We need to find the price that we are going to be long-term bag holder, as the crypto community say, even though this is a stock. But before I click enter, guys, if you don't know who I am, time to introduce myself. My name is Ziv, also known as Finance After 40. I am new to YouTube. I have about 15,000+ community members following me on TikTok, as well as members of my Patreon, where I basically sell options for income. Just yesterday we sold some put spread options on Tesla, collected about $180 for every $500 that we risk. Feel free to check the description below and join us for only $10 a month or 2 cups of Starbucks coffee. Fair value of Facebook according to Warren Buffett is $366. Not bad at all. Compared to the price today of 294, that's not bad. The price that it should trade is 366. That's good news if you are a Facebook hodler. And the price that we are buying is not 294. We are supposed to be a buyer at 245, which is about, if you do the math, 245/294, about 17% discount from here if we ever get to that level. But if you already have Facebook and you bought for the price below 245, most likely you are a happy camper, because as of today Facebook is worth 366. And if I bring you guys any sort of value, don't forget to subscribe, and I will link right now, if you see on the top of your screen, other stocks, Microsoft, Intel, and just see the fair value of those two as well, and decide with yourself if you wanna buy, is it undervalue or overvalue. And I will see you next time. Thank you for watching. Yeah.